If you want to build wealth, you need to think beyond your monthly paycheck. Investing is the key to financial freedom. As we journey through life, we must realize that our financial well-being is not just about earning, but also about growing our wealth. Investing in its many forms is the most effective way to do this. It's the process of putting your money to work, creating additional streams of income, and building a comfortable future. In today's discussion, we're going to explore 5 powerful investments that can help anyone build wealth. These aren't just for the Wall Street whizzes or real estate moguls. These are strategies that anyone can use, no matter their starting point. We'll cover everything from the ever-dynamic stock market to the stable world of real estate, and even the somewhat less-known realm of peer-to-peer lending. So, without further ado, let's dive into these 5 powerful investment strategies. The stock market is a classic wealth-building tool, and for good reason. Picture this. The stock market is like a bustling marketplace. Instead of fruits and vegetables, though, what's being bought and sold are shares of companies. These shares represent a slice of ownership in a company. When you buy a share, you're essentially buying a piece of that company's success or failure. Now here's where it gets exciting. The stock market has the potential for high returns. Over the past century, the average stock market return, after adjusting for inflation, is around 7% per year. That's a powerful rate of return, especially when compared to the paltry interest rates offered by most savings accounts. But here's the catch. The stock market can also be volatile, with prices fluctuating on a daily basis. This is where the concept of diversification comes in. Diversification is essentially the financial version of don't put all your eggs in one basket. By spreading your investments across a variety of stocks, you can help buffer against the ups and downs of the market. This way, if one stock performs poorly, it won't sink your entire investment portfolio. So, how does one start investing in stocks? Well, there are many online platforms and brokerages that make it easy to buy and sell stocks. And you don't need a fortune to get started. Many platforms allow you to buy fractional shares, which means you can start investing with just a few dollars. But remember, investing in the stock market isn't about making a quick buck. It's about building wealth over the long term. This requires patience, discipline, and a willingness to ride out the market's inevitable ups and downs. So, the stock market offers high potential returns, but remember to diversify and think long term. Investing isn't a sprint, it's a marathon. It's not just about getting rich quick, it's about building sustainable wealth over time. And the stock market, with its potential for high returns, is a powerful tool in that endeavor. Real estate is another powerful investment tool that can help you build significant wealth. Now, real estate investing isn't just for the rich and famous. In fact, anyone can get started with a little knowledge and the right strategy. Let's break it down. Firstly, there's rental income. Think of it as a business. You buy a property, find a tenant, and collect rent. The idea is for the rental income to cover the property's expenses and ideally, leave some profit for you. But remember, managing a rental property takes time and effort, so factor that into your calculations. Next, we have property appreciation. This is where the magic happens. Over time, property values tend to rise. That 2-bedroom house you bought for $100,000 today, it could be worth double that in 20 years. This increase in value or appreciation can lead to significant wealth over time. Then there's the cherry on top, tax advantages. Real estate investors can deduct property-related expenses like mortgage interest, property taxes, and maintenance costs from their taxable income. Plus, there are other tax benefits like depreciation, which can further reduce your tax bill. But how do you get started with little money down? Well, there are numerous ways. You could consider house hacking, where you buy a duplex or a house with a basement apartment, live in one unit, and rent out the other. Or you could look into crowdfunding platforms that let you invest in real estate with as little as $1,000. And let's not forget about real estate investment trusts, or REITs. These are companies that own, operate, or finance income-generating real estate. You can buy shares of a REIT just like you would buy stocks, making it a straightforward way to get into real estate investing without having to buy a property yourself. So you see, real estate offers multiple avenues to build wealth. And the best part? You don't need to be a millionaire to get started. All you need is a bit of knowledge, a dash of determination, and a sprinkle of patience. So, real estate can be a stable and profitable investment if done correctly. If you're looking for a more hands-off investment strategy, mutual funds and ETFs could be your answer. So let's dive straight in. What are mutual funds and ETFs? Well, when you invest in a mutual fund, you're pooling your money with a group of other investors. This collective pot of money is then managed by a professional who invests it in a variety of assets like stocks, bonds, or other securities. ETFs, or exchange-traded funds, operate on a similar principle. They track an index, sector, commodity, or a basket of assets, and can be bought or sold on a stock exchange just like individual stocks. Now, why should you consider them? One of the biggest advantages of these investment vehicles is diversification. Because your money is spread across a range of different assets, you're not putting all your eggs in one basket. This can help to minimize your risk. Another benefit is professional management. With mutual funds, your investment is handled by seasoned experts, who make decisions based on extensive research and years of experience. With ETFs, the fund is designed to track a specific index or sector, which can help to take the guesswork out of investing. So, how do you start investing in mutual funds and ETFs? You can purchase mutual funds directly from a mutual fund company, a bank, or a brokerage. ETFs can be bought and sold on the stock exchange through a brokerage account. It's as simple as that. But remember, with any investment, there's always a degree of risk involved, and it's important to do your own research before diving in. Consider your financial goals, your risk tolerance, and the amount of time you're willing to commit to managing your investments. Mutual funds and ETFs offer an easy way to invest in a diversified portfolio, making them a great option for beginners. And while they may not promise the thrill of picking individual stocks or properties, they provide a solid, hands-off approach to building wealth over the long term. Investing in retirement accounts now can ensure a comfortable future. Now let's delve into the world of retirement accounts such as 401(k)s and individual retirement accounts, or IRAs. These are powerful tools to build wealth that are often overlooked due to their long-term nature. Yet they offer significant advantages that can help you grow your wealth steadily and securely. Retirement accounts like 401(k)s and IRAs are special types of investment accounts with unique tax advantages. A 401(k) is a retirement savings plan sponsored by an employer. It allows workers to save and invest a piece of their paycheck before taxes are taken out. On the other hand, an IRA is an account you open on your own, separate from your employer, and contributions are often tax-deductible. One of the biggest advantages of these retirement accounts is their tax benefits. In a traditional 401(k) or IRA, the money you contribute is often tax-deductible, meaning it reduces your taxable income for the year. Additionally, the money grows tax-deferred, so you won't pay taxes on your investment gains until you withdraw the money in retirement. Now you might be thinking, I'm young, why should I start thinking about retirement now? Well, the answer is simple. Time is the best ally of any investor. The magic of compounding interest means that the earlier you start investing, the more time your money has to grow. Even small contributions can add up to substantial sums over time, thanks to the power of compound interest. Anyone with earned income can start investing in these retirement accounts. Even if you're only able to contribute a small amount each month, it's still worth it. Over time, these small contributions can add up and grow into a substantial nest egg for your retirement. So whether you're a seasoned investor or just starting out, don't overlook the power of retirement accounts. They offer a simple, tax-efficient way to build wealth over the long term. Remember, the earlier you start investing in your retirement, the better off you'll be. The final strategy we'll discuss is peer-to-peer lending, a unique and potentially profitable investment. This innovative form of lending functions as an online platform connecting borrowers directly with investors, cutting out traditional financial intermediaries like banks. Here's how it works. As an investor, you can choose to fund loans for individuals or small businesses. These loans are typically repaid with interest, providing you with a return on your investment. It's a win-win situation. Borrowers get access to funds they might not otherwise qualify for, and you get the chance to earn higher returns than traditional savings or investment accounts. However, like all investments, it carries risks. The primary one being the borrower's default. But don't let that deter you. By spreading your investment across multiple loans, you can mitigate this risk and create a more stable income stream. Peer-to-peer lending can be a great way to diversify your investment portfolio and earn a decent return. Well, there you have it. 5 powerful investment strategies that anyone can use to build wealth. We've journeyed through the exciting world of the stock market, a playground for risk and reward. We've explored the real estate market, an avenue for tangible, long-term gains. We've delved into mutual funds and ETFs, offering diversity and convenience in a single package. We've also underscored the importance of retirement accounts, a slow and steady wealth builder that provides tax benefits. Lastly, we've introduced peer-to-peer lending, a modern approach to investing that empowers both borrower and investor. The power of investing lies not just in multiplying your money, but in understanding the potential of each dollar and directing it towards your financial goals. It's about taking control of your financial future and building a legacy. So step out and start investing, because every dollar invested today is a step towards a wealthier tomorrow. Thank you for watching. Don't forget to subscribe for more financial tips and strategies. Remember, investing is the key to financial freedom.